Hi, my name is James Shepard with CCSalesPro.com, and this is an exciting series that I'm going to present for you today, which is going to be, we're going to do part 1 today, part 2 tomorrow, part 3 the next day on how to sell merchant cash advances. So in this first video, I'm just going to give you an introduction to cash advances so you understand what they are, why merchants use them, and really just kind of how they work in general. All right, so here we go. So what is a merchant cash advance, first of all? Basically, a merchant cash advance works this way. Let's say you have a restaurant, and this restaurant processes $20,000 a month in credit card transactions through their credit card machine, their credit card terminal. And they've been doing this for over 6 months. They've been in business for over a year, and that's the general guidelines. They got to be in business over a year. They got to have 6 months worth of credit card processing statements that show a consistent amount of volume. So they have this $20,000 a month in credit card volume there, and so we can guess and estimate and hope that they're going to continue having about $20,000 a month in credit card volume that's going to come through that credit card machine. A merchant cash advance basically is simply this. Business owners who really need to get capital for their business quickly, they need to get it right now, they're not going to be able to go to a traditional bank because banks are going to take 60 to 90 days to give them the money. About 75% of the time, they don't even qualify for a loan from the bank because of poor personal credit, lack of enough time in business, their cash flow constraints, whatever it might be. Banks are normally, when you really need money and you need it quickly, a bank is never going to give it to you. Okay? Banks give you money when you don't need it. That's just the general rule. That's the way it goes in business. Every time in business when you're like doing so well, then all of a sudden all the bankers are coming and saying, hey, we want to loan you money. Well, thanks. I needed it a year ago. I don't need it now. So that's how bank loans work. So a merchant cash advance fills that kind of that gap where you can't get the bank loan, but you need the money in some way, shape, or form. What a merchant cash advance basically does is it looks at your credit card processing or merchant processing volume, and it says, okay, let's look at that and let's loan you money as a business owner. We're going to loan you money, okay, based on we're going to get paid back by keeping a percentage of your credit card volume as it comes through your terminal. So let me give you an example of this, okay? Let's just say for argument's sake that we're going to do a $10,000 cash advance for a merchant that processes $10,000 a month in credit card volume. So we're going to make the math really easy here, okay? So we have a merchant, they do $10,000 a month in credit card volume, right? And they need to get a $10,000 advance, okay? Now, on that $10,000 advance, so they're like, hey, I need $10,000 in cash. I need it like now. I need it this week because I got to pay payroll and I have a bunch of things I need to get. I have to buy some things in bulk, or we're having a little bit of a downturn in our business. Whatever it is, they need some money, okay? So, and they need it right now. So we're going to go ahead and wire them $10,000, no personal guarantee. Their personal credit's not a major concern. All we're looking for is they got to be in business for a whole year, and we're looking for 6 months of credit card statements to see what their credit card volume traditionally is. So we wire them $10,000, okay? Now, they're going to get a factor rate on that $10,000. Now, that factor rate's normally going to be in the range of 1.3 to 1.4. Okay, so you take $10,000 times, let's just say, again, to make the math easy, let's just say times 1.4. So that's $14,000, all right? So we say, okay, they're going to pay us back $14,000. So they got $10,000, and so they get a cash advance for $10,000. They're going to pay back $14,000, or 1.4 times the amount they got, the factor rate, okay? Then the next thing you got to look at is the approximate term that they're going to pay it back over. So it's not like a traditional loan where it's a set time period, like it's a 10-month advance. You do an approximately 10-month, let's say. So they got to pay back $1,400 a month. $14,000 divided by 10, $1,400 a month. Now, remember what we said, how they process about $10,000 a month? So one of the big differences between a merchant cash advance and a traditional loan is that a traditional 10-month loan, they would say, okay, so you have to pay us back $1,400 a month. There's like a monthly payment. Merchant cash advances don't work that way. They say we're going to get paid back over approximately 10 months, but the way we're going to get paid back is we're going to take 14% of your total credit card processing volume until the loan is paid back. Now, how did I come up with 14%? Well, we know that they're going to pay back about approximately $1,400 a month. And we know that they process about $10,000 a month in credit card volume. So 1,400 divided by 10,000 is 14%. So in this case, whatever the cash advance company is that you use, they're going to withhold 14%. So let's say in a particular day, the merchant processes $100 in credit card volume, okay? When they go to batch or settle that amount, that settlement goes up to the processing company. Then the processing company takes the batch. Normally that full $100 would go to the merchant, but instead 14% or $14 goes over to the cash advance company, and the remaining $86 goes to the merchant's bank account. That process just repeats itself over and over and over again until approximately 10 months later, they've been paid back the loan, the $10,000. Okay? So that's how a merchant cash advance works. It's very simple. The requirements are pretty simple. You got to have a year in business. You got to have 6 months of credit card processing statements that show a pretty consistent amount of volume. They're going to need to process well over 5,000. I mean, 5,000 is the absolute minimum they can process. How much can they get? Normally, it's between 80 to 120% of the processing volume for a month. So if they process $10,000 a month, they can get about $10,000, somewhere between 8 and 12,000. 80% to 120%. So you can look at their monthly volume. They're going to get about that, a little less, a little more. They're going to get approved for. Okay. Now, last thing we'll talk about in this first video, kind of part one on how to sell the merchant cash advance. We're going to talk in this video here for just a minute about why do they need a merchant cash advance. Now, first of all, when you're presenting a merchant cash advance to the merchant, you really want to stay positive. You want to talk about their business growing, opportunities they're trying to take advantage of. Now, the reality of business is that usually they need the merchant cash advance for some kind of an issue that they're having. Again, it could be just an unexpected expense that came up. It could be an opportunity, but normally it's some kind of unexpected expense that came up. They're running a little short on payroll. They had a lot of times, probably half the time, it's some kind of a personal thing, right? They had a personal issue. They're trying to get some money. They don't have any personal credit, but they do have this business, and so they're trying to pull a little bit of money out of there so they can take care of this family issue or whatever it might be. So there's a variety of issues, but the key thing is that they need to get the money quickly, okay? So this was how to sell a merchant cash advance part one. In part two, I'm going to talk to you about how to present the merchant cash advance, how to sell it, the pitch. And then in part three, we're going to talk about the process of actually making it work. Okay, so part two coming up. So don't miss. Make sure you go to part two of the training and watch that video next.